Every year, everything gets more expensive. Your groceries cost more, your rent goes up, your electricity bill increases. But the money sitting in your bank account? It stays exactly the same. That's inflation. And it's silently stealing your wealth every single day. While millions of people struggle during inflation, Warren Buffett built one of the greatest fortunes in history by following a few simple principles that actually work when prices rise. Today, I'm going to share 5 powerful lessons from Warren Buffett that can help protect and grow your money during inflation. First, let's talk about the biggest mistake most people make. When inflation rises, people panic. They cut spending. They keep more cash sitting in the bank, and they wait for things to improve. But here's the problem. Cash loses purchasing power over time. If inflation is higher than what your savings earn, you're becoming poorer without spending a single dollar. The goal isn't just to save money. It's to make your money work harder than inflation. Lesson number 1. Own productive assets. Warren Buffett believes one of the best ways to fight inflation is by owning businesses that create value. Instead of letting your money sit idle, put it into companies that generate profits. Great businesses can raise prices when their costs increase, which helps protect their earnings during inflation. As an investor, you benefit from that growth instead of watching your cash lose value. Lesson number 2. Invest in yourself. Buffett has often said the best investment you can make is in yourself. Inflation can reduce the value of money, but it can't reduce your skills, your knowledge, or your experience. Learning a high-income skill, improving communication, or building expertise can increase your earning potential for decades. Your abilities are assets that appreciate over time. Lesson number 3. Don't overpay for investments. One of Buffett's golden rules is simple. Price matters. Even an amazing company can become a poor investment if you pay too much for it. During inflation, markets become emotional. Investors chase trends, and many end up buying at inflated prices. Buffett stays patient. He waits for opportunities and buys quality businesses when they offer real value. Successful investing isn't about buying fast, it's about buying wisely. Lesson number 4. Stay patient and ignore short-term noise. Inflation often creates fear. Headlines predict disaster. Markets swing wildly, and many investors panic. Buffett takes the opposite approach. He focuses on the long term and avoids emotional decisions. He believes wealth is built by staying invested through uncertainty, not by reacting to every headline. Patience is one of the most valuable investments you can make. And finally, lesson number 5. Let compounding beat inflation. Warren Buffett didn't become one of the world's richest investors overnight. He allowed compounding to work for decades. When you consistently invest and reinvest your returns, your wealth grows on top of previous growth. Over time, that snowball effect can outpace inflation and create extraordinary wealth. The secret isn't timing the market. It's giving your investments enough time to grow. Inflation is unavoidable, but losing money because of it doesn't have to be. Warren Buffett's strategy is surprisingly simple. Own productive assets. Invest in yourself. Buy value instead of hype. Stay patient. And let compounding do the heavy lifting. While most people fear inflation, smart investors prepare for it. Because the best way to beat rising prices isn't to hide your money, it's to put it to work. If you enjoyed this video, don't forget to like, subscribe, and share it with someone who wants to build lasting wealth in any economy.